How to start trading the right way. Beginner rules that matter. Before you place another trade, stop. If you're tired of watching losing trades wipe out your account, if confusion, fear, or randomness is running your decisions, then this video is for you. Today, I'm going to show you the core rules every beginner trader must follow, or else risk blowing up your account early. No hype, no get-rich fantasy. Just the rules that protect your money and start your trading journey the right way. Let's get into it. Why most beginners lose. Look, over 80% of beginner traders lose money within the first 6 months, and the reasons aren't luck or timing. They're common mistakes you can avoid if you understand the 5 foundational rules. Most beginners jump into trades without a plan. Chase the latest hot crypto or stock pick, trade without risk rules or protective stops, let emotions drive their decisions. If any of that sounds like you, don't worry, we're going to fix it starting right now. Rule number 1, know your market and time frame. Choose a market and time frame and stick with it. Here's why. Stocks behave differently than crypto. Forex moves differently than equities. A 1-minute chart is not the same game as a daily chart. If you try to learn them all at once, you learn nothing well. Pick one market and one time frame. For example, if you're risk-averse and starting, choose daily charts in stocks or major Forex pairs. If you enjoy faster action and can manage risk tightly, trade small positions on lower time frames. But decide before you trade, not after. Rule number 2, every trade needs a plan. Never enter a trade without a written plan. A real trading plan answers, why am I entering this trade? Where is my entry level? Where is my stop loss? Where is my target? How much am I willing to lose? If you can't answer these before entry, you're gambling, not trading. Example. Entry, buy Euro USD at 1.1250. Stop loss, 1.1220, 30 pips risk. Target, 1.1300, 50 pips reward. Risk, 1% of account. That's a real trade plan, not, I feel like it might go up. Write it down, follow it. Rule number 3, protect your capital first. Capital preservation outweighs profit. This means you never risk more than a small percent of your account on any single trade. You use protective stops. You accept losses quickly so winners can run. Most beginners do the opposite. They risk too much, then hold losers hoping they'll turn around. That's how accounts go to zero. Recommended rule, risk 1 to 2% per trade max. If you can't stomach that, reduce size or delay trading until you can. Protecting your money is your first job as a trader. Profits come later. Rule number 4, entry and exit signals matter. You must use objective signals for entry and exit. I mean, defined chart patterns, support and resistance levels, moving average crossovers, breakouts with confirmation, candlestick confirmation, not vibes. Not news headlines. A signal is a repeatable reason you entered. Before you click buy or sell, ask, what signal triggered this? Has it happened before? Did it work in similar conditions? If you can't articulate the signal, don't trade it. Rule number 5, journal every trade. You must track every trade you take. In your journal, write trade date and time, entry and exit, setup reason, your emotion at entry, outcome, and lesson. This is how improvement actually happens. Professional traders don't guess, they analyze data from their own history. Without a journal, you're flying blind. So, let's recap the beginner rules that matter. 1. Choose your market and time frame. 2. Always trade with a written plan. 3. Protect your capital first. 4. Use objective entry and exit signals. 5. Journal every trade. Put these into practice immediately and you'll reduce early losses, stop the randomness, and start trading like a student of the market instead of a gambler. This is Online Trading Hub, helping you trade smarter from day one.